Hello, my name is Adrienne Eaton, and I'm the Dean of the School of Management and Labor Relations at Rutgers University and our symposium today. Um, I'm here to welcome you to the third annual symposium on private equity and employee share ownership. I wasn't able to attend the second symposium myself, but I did attend the first, and I know I learned an enormous amount about private equity and the potentials that private equity has around employee share ownership and employment generally. We think that private equity is a really important domain to be exploring as a large part of the employment picture in the United States. And the fields that we study at the School of Management and Labor Relations are really just beginning to grapple, I think, with private equity as a player in the role of employment. So I'm delighted that we're sponsoring this conference again, and as always, very sorry that we aren't able to do this in person. Much of the learning, of course, goes on in the formal presentations, but also in the schmoozing between presentations, and I know that we're all really sorry to miss that. I just want to end by saying thank you to Joseph Blasi, the director of the Institute for the Study of Employee Ownership and Profit Sharing, and then to Chris Michael, who has done so much of the work to organize the conference. So thank you to Chris and to Joseph. And now I will turn you over to Joseph. Thank you.
Good morning. My name is Joseph Blasi. I'm the J. Robert Beister Professor of Employee Ownership here at Rutgers University School of Management and Labor Relations. And I also serve as director of our Institute for the Study of Employee Ownership and Profit Sharing. I'd like to give you a hearty welcome to our conference today on private equity and employee share ownership. Thank you to Citi's Community Investing and Development team for its support over a number of years for our data analysis, convenings, and other initiatives. Rutgers has led the field in promoting employee ownership as an inclusive finance solution, especially research focused on how employee ownership impacts households of color and low and moderate income households. I'll be very brief today. I want to tell you a little bit about our plan for today and our institute. Our plan is to encourage private equity partners who are involved in transactions and deal structures that include broad groups of employees participating in their portfolio companies in sharing the profits and the wealth, equity participation or profit sharing created in those companies. And I think it will be an interesting day. We academics are going to sit by and listen to the private equity industry discussing these ideas. At the end, we'll have an academic roundtable with a number of experts on both employee share ownership and private equity scholarship. Just say a few words about the Institute for the Study of Employee Ownership and Profit Sharing. We've spent about 12 years developing the Institute. I want to thank the J. Robert Beister Endowment at Rutgers and the Beister Foundation for Enterprise Development for helping us develop this institute, along with the Employee Ownership Foundation. The Institute does four things. First of all, every year we award research fellowships to academics from around the United States and around the world to study and research employee share ownership and profit sharing. Secondly, we sponsor the two largest academic conferences in the world on these topics. Thirdly, we pride ourselves on doing empirical research and developing, creating, and managing the data sets to allow us to do empirical research on these questions. And finally, we have a policy analysis group that is engaged in helping political representatives analyze, evaluate, and develop policy options in this area. So thank you very much. Finally, I would like to give a special shout out to Professor Chris Michael, who is the chair of this symposium today. His great dedication and his work, well, you'll see it all manifest as we move through the program and the day. Thank you very much, Chris.
Thank you, Joseph and Adrian. Hi, everyone. My name is Chris Michael. I'm an assistant professor of practice at the Rutgers School of Management and Labor Relations, where I direct the private equity initiative at the Institute for the Study of Employee Ownership and Profit Sharing. Outside of the university, I operate law and investment banking practices that focus on employee ownership transactions. In particular, I work on the main British vehicle for employee ownership, known as the Employee Ownership Trust, or EOT, which I've helped to develop for use in the United States. Today's event will run more or less according to the program. You can access it above in the header. All of the talks are going to be right here in the main room. At about 12:15, after John Kober's talk, attendees are invited to go to the breakout rooms, which will be conducted through Google Meets. To get there, just go back out to the main page, click on breakout rooms, and then look at the top of the page in the header for the name of the firm that you'd like to meet with. You can join more than one of these sessions, and then at 1 p.m., we'll reconvene in the main room here for our academic roundtable. Of course, in the header, you can visit the Institute's website. You can also sign up for the Private Equity and Employee Share Ownership Symposium email list so that we can make sure you get an invitation to next year's symposium. We might also issue very occasional and very infrequent updates about developments in the use of employee share ownership in private equity deals. That brings me to one request, which is that if you know of private equity deals that involve the use of employee share ownership, profit sharing, gain sharing, ESOPs, please let us know, as we are currently planning the 4th annual symposium, which will continue on our originally planned spring schedule. Finally, I'd like to reinforce the fact that this is a private event. It's intended primarily for members of the private equity industry and capital providers. We do have a limited number of guests who work outside of private equity. Naturally, we expect and require that everyone behaves in a civil and respectful way, and I'm sure this won't be a problem. One last technical note, we used this conference platform for our June 2020 academic conference. As with most things on the web, if you run into any issues, I'm thinking here in particular of the chat functionality, please just refresh the page. Everything should work just fine. So with that, I invite everyone to enjoy today's conference. We are so pleased to have as our first speaker, Mary Josephs, founder and CEO of Verit Advisors. Mary is a nationally recognized expert on ESOPs. She has more than 30 years of experience and been involved in more than 300 transactions, structuring ownership transitions at middle market companies. She's going to present us with a state of the field talk. Thank you so much, Mary.
Good morning. Welcome. So excited to, at least virtually, be with all of you and be able to recap the exciting momentum that we're seeing between employee ownership, employee engagement, and private equity. So stay tuned. Thanks to our good friends at Rutgers for both their continued commitment to this important opportunity for private equity and continuing to support this conference. Agenda. What are we going to do today? I will start out with talking about today's conversation and who we're going to talk to, and then I'm going to pivot to our current observations and why we're excited on the momentum we're seeing between employee ownership and private equity. I'm Mary Josephs, founder and CEO of Verit Advisors, a boutique advisory firm specializing in all sorts of advisory activities related to companies that have employee ownership. So let's get started. The universe of tools and strategies to improve performance extends far beyond the traditional leveraged ESOP. That's a really important point. The ESOP world, which I come from, often thinks employee ownership, employee engagement, leveraged ESOPs. I really want you to pull back today as we're listening to the stories and be open-minded about the different strategies, starting with our good friends from KKR and the incredible success Peter Stavros has had with their investments on employee engagement, gain sharing, profit sharing. Stock and cash bonuses continued to be popular and the norm in private equity, and equity incentives for key management. Nonetheless, ESOP market activity is going to be super interesting from our friends at Morgan Lewis. And again, sometimes we have a tendency to bifurcate ESOP or not ESOP. I think what will be interesting about Morgan Lewis's comments is it's not all or nothing. There are strategies to buy or invest in an ESOP company and continue to perpetuate part of the ESOP or employee ownership. Opportunity zone financing, our friends from American Working Capital are going to talk about strategies there. ESOPs and SBICs, our friends from Mosaic are going to give you examples there. So we're excited about today. Please stay as long as you can. I think Rutgers will give us more information about chat functions and questions. So we've been talking about ESOPs and private equity for over a decade. At first it was theoretical. The ESOP folks were super interested in it. Private equity, not so much. Then it became anecdotal. A story here, a story there. What I'm going to invite you to consider is it mainstream now. We're seeing an increase in the intersection of employee ownership, employee engagement, and private equity. PE exits to an ESOP. We just completed a deal called Project Independence. A very large private equity firm ran a process with a very reputable middle market investment bank. And we represented the management team as another bid into the process to eventually culminate in a successful transaction where management raised equity capital and debt capital and was the prevailing bidder to become 100% employee owned. ESOP exit to private equity. We worked on a transaction of a mature ESOP company, and listen in here, private equity, because I think this is a real growth opportunity for you. Existing mature ESOP companies, they're a bit hamstrung because of the claims on cash flow for repurchase obligation, for debt, for a margin of safety for an unforeseen event like COVID-19, and for growth. And these companies realize that a better solution is an exit. Morgan Lewis is going to talk about some strategies, but there's a lot of opportunity and creativity there, so stay tuned and listen in. PE investments in growth capital of ESOP companies. This is important for both de-risking a transformative acquisition or investment by a 100% ESOP company and for providing capital. So, for example, and the most well-known public story is KeHE Foods, who originally raised capital from Prudential Capital and now Towerbrook Capital. And the purpose of the capital raise was to buy a company many times their size. So the 100% ESOP became a 70% ESOP roughly. So we can do things like that. And, it's 1 and 1 makes 3. A 70% ESOP became way more valuable than the 100% ESOP. So private equity and growth investments. This is one that's trending right now as a result of COVID. I think people can agree that the challenge is a path to liquidity. So some larger companies, public companies in particular in our experience, are looking at a path to liquidity to get through to the other end of the economic impact of COVID. One strategy is divestiture of a non-core subsidiary or a subsidiary that the market's not actually appreciating the value of in the public price. So we're working on a couple of transactions, actually more than that, where we're representing the management team in an MBO ESOP divestiture from a public company. Source of funds? Sure, structured equity, which I'm sure our panelists will talk more about as the day progresses. So my point is that activity is up. PE activity is up in the intersection of ESOPs and private equity. PE as a bridge to capital to meet seller note objectives in new ESOPs. I don't see that as often, but Mosaic will refer to some of those. PE as a bridge capital to stay private. I'm seeing this now in, take a distribution company that has maybe weathered the COVID storm, but doesn't have the working capital to grow out of it. having a PE partner to help them stay private as interim capital is a strategy that I'm seeing successful ESOP companies pursue. One thing I don't want to leave without talking about is ESOPs in the ETA and search fund world. So what you're seeing out of my hometown, University of Chicago and Northwestern, but Stanford has a playbook on it, MIT has a playbook on it, Harvard does, is ETA, entrepreneurship through acquisition, and search funds. So you have these talented executives looking to buy existing companies, and they've got search funds to provide capital for it, private equity. Existing ESOPs are a target for these companies, as are ESOPs as a transaction alternative. Back to my earlier point, to the extent that the seller wants all cash at close, private equity could come in as bridge financing to make that transaction happen. And lastly, I want to reference ESOPs in the impact world, in the social impact world. 5 years ago, when we were giving this conversation, that was more of an isolated, perhaps down market, smaller investment. And today you have very large, credible private equity firms meeting the demands of much larger private middle market firms who want to have some sort of continuity with being a B Corp or social impact. So pay attention to those opportunities as well. This is what's exciting for private equity. Deal flow. So it's a very competitive world still, with more capital out there than perhaps good investment opportunities. What anecdotally we're seeing is a significant uptick in transactions with privately held businesses. Why? Could it be after COVID that there's a concern that something could happen to have all your eggs in one basket? Maybe they ought to pay attention to wealth planning, transition, diversification. Could it be that there's a concern of increased taxes on capital, gift taxes, capital gains taxes, transfer taxes, etc., or even income taxes? Could it be that you didn't transact before the Great Recession and now you're 13 years older and it's time to sort of pay attention to what your strategy is? Whatever the reason, we're seeing more inbound on new ESOP formations since COVID than we've seen at any point in time in the last decade. Many of them might first start out as partial exit alternatives for diversification, but as you look at the scheme of strategies, a different strategy might emerge: a full sale to private equity, or a private equity partner so the owner can get more cash at close. The nice thing that companies like about the ESOP strategy vis-a-vis straight out to private equity or strategic is they maintain governance. And, as Peter Stavros is going to talk about in a minute, the employee engagement as a recruiting tool in a competitive labor market. I want to talk about financing. There's a concern that you can't finance an ESOP transaction. Well, I'm here to tell you altogether differently. The same capital markets products that support non-ESOP transactions, BDOs, unitranche, non-bank financial institutions, junior capital, there are enough of them that are ESOP fluent that I'm sure the private equity firm will be able to stack the capital structure in a way, including, ABL term loans from senior banks all the way to any type of unitranche or non-bank financial institution. So you need to have the capital to be able to close your deal, and I wouldn't let not being able to raise capital in an ESOP be a concern of yours. We are definitely seeing more activity in what we call dual track, and that would be looking at a privately held business owner looking at private equity, ESOP, and strategic simultaneously. And our view and what we're seeing is sort of an interest in the intersection of employee ownership and private equity to have the tax and cultural benefits of employee ownership and the cash and I would say talent benefits of private equity. So in conclusion, we are thrilled with the new case studies Rutgers will present today, and with the ongoing momentum of additional strategies like KKR's, who will be our first presenter. We do believe this is a meaningful opportunity for private equity to pause and lean in to employee ownership strategies to increase solid and successful deal flow and returns for all. Thank you very much and enjoy your day.